Hi, this is Jim Pearce, Chief Investment Strategist for Personal Finance, with a weekly update on Friday, March 8, 2024. This morning's jobs report for February was a mixed bag. Despite a rise in the unemployment rate from 3.7% in January to 3.9% last month, the economy added 275,000 jobs at the same time. That is far above the expected figure of 200,000 new jobs. Nevertheless, the unemployment rate is at its highest level since the Fed started raising interest rates 2 years ago. So here's that press release, and you can see the charts they have here. The one on the left is the unemployment rate, and you can see way over here on the right that little blue dot is just slightly higher than the blue dot on the far left. And 2 years ago, of course, was when the Fed started raising rates. You can see a noticeable trend here, I think, over the last maybe 6 or 8 months, where it's been more in the 3.5 to 3.7 range. So nevertheless, that's still a good number, though. Anything under 4% is a good number. Over here on the right is non-farm payroll jobs, also going over the past 2 years. And of course, some of these numbers on the far left are inflated because 2 years before that was when the whole coronavirus pandemic was up in the economy and the unemployment rate briefly spiked up. But really, if you look back for the last year, it's a very solid looking chart. So speaking of interest rates, earlier this week, Fed Chair Jerome Powell said to Congress that interest rate cuts can and will begin this year. However, he also cautioned the economic outlook is uncertain and ongoing progress toward our 2% objective for inflation is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress we have seen in inflation and ultimately require even tighter policy to get inflation back to 2%. So here is that testimony, or at least a summary of it. And this was his opening statement, really. But nevertheless, that's all Wall Street needed to hear to drive the S&P 500 index up to a new all-time high yesterday. So here's a chart of the S&P 500 over the past year. And if we go just down year to date here, you can see that yesterday, which is where I have the cursor right now, is the highest point it's been at thus far. But it was also good news for small cap stocks. Now I'm going to show you the Russell 2000 index, which in this case, first I'll go back to 1 year to show you that the index now is finally broken above that level that it hit in late December. And until the past week, it tried a couple times to get above it. But now it's higher than it's been in more than a year. Now if we go out to 5 years here, you can see back here in November of October, November 2021, it was almost what is that, about 200 and almost 300 points higher than it is now. So it needs to rise about another 20% to reach its all-time high. And it may do that later this year if and when the Fed starts cutting interest rates. Now here's an interesting data point. Also hitting a new high this week is the price of gold. So again, I'm going to go out 1 year just so you can see this big spike over here on the right just over the past week or so from around $2,000 an ounce. This morning, the price of gold briefly rose above $2,200 an ounce for the first time ever. Presumably that's in response to the increasing likelihood that an interest rate cut will drive up the value of the US dollar. Now that might seem confusing to some people since gold is often cited as a reliable hedge against inflation. However, its record as an inflation hedge over the past 50 years, basically since the United States officially went off the gold standard, its record as an inflation hedge since then is inconsistent. Instead, it tends to track the strength of the dollar, which in turn is affected by inflation and central bank monetary policy. But remember, gold is traded in US dollars and quoted in US dollars all over the world. So I think that's maybe the most telling stat this week of all of them, that suddenly gold, because if we go out to 5 years, you can see gold's been around 2,000, it's hit 2,000 several times, but finally broke above that resistance level. So all of that begs the question, what wall of worry will the stock market climb over the remainder of this year? If inflation has been tamed, the jobs market is expanding, and the economy is growing, there doesn't seem to be much that could go wrong. That makes me nervous. It's when you think nothing can go wrong that something does. I'm not being pessimistic, but I think it would be a mistake to assume that there is very little risk in the stock market right now. With all the major indexes at or near their all-time highs, an unexpected jolt of bad news could trigger a quick sell-off. Right now, Complacency is the biggest risk to the stock market. The economy is on a roll and Wall Street's enjoying the ride. As always, stay disciplined and don't chase the market. That's this week's update, and I look forward to talking to you next week. Thank you.